Hello investors. The S&P 500 experienced a huge increase to make the stock market achieve an all-time high. The increase was fueled by strong earnings and economic readings which bolstered investors' confidence in the stability of the market. The S&P 500 has broken its all-time highs by gaining 0.3%. This is partly to the credit of the strong performances of the information technology and consumer discretionary sectors. The positive surprises aren't limited to stocks. Risk assets, such as bonds, have also been positively affected by a surprisingly low number of weekly jobless claims reaching 333,000. The Dow Jones dipped late yesterday, but managed to avoid any sizable losses and managed to come off session lows. Earlier Wednesday, the Dow set a fresh all-time high after posting the first one since the end of August. Nasdaq had a good day of trading on Thursday. Netflix and Tesla stocks helped it rise by 0.6%. Bitcoin prices have decreased from their all-time high reached earlier this morning at $66,000, down to $62,000. Earnings have been great this year. You can see that with Verizon, Anthem or Abbott Laboratories all having just reported strong earnings. What's also impressive is how big banks kicked off the streak last week when they all reported strong numbers. Tesla's shares jumped up after it posted profits that were higher than estimates on the back of record-breaking deliveries. Even though revenues only came in below expectations, shares are already at their highest point since last April. As stocks are hitting near record highs, the kind of earnings beats you see will need to be consistent to keep the bounce going. Stock futures opened lower Thursday evening after investors took in another batch of earnings results and more economic data. All of the major U.S. indexes dropped a little bit as investors started to fear things might not be going as well as they thought, after stocks surged to all-time highs Wednesday. Snap shares sank more than 20% late today after the company failed to meet revenue expectations and issued a weak guidance for the next quarter. Some analysts have pointed out that Apple's new privacy updates have affected Snap's advertising revenue as well, especially since many Snap advertisements are seen alongside Instagram stories. Shares of Intel, INTC, sank after the company said it would be under pressure for the next few years because of materials shortages. In spite of higher-than-expected same-store sales, Chipotle shares fell. The company also cited staffing shortages as a problem. Despite some mixed earnings reports Thursday afternoon, the S&P 500 and Dow Jones have remained close to their all-time highs. They've had a boost from earlier reports on higher-than-expected corporate profits and economic data. These two statements will help alleviate our fears of a slowing U.S. economy amid an upswing in the number of retailers opening up shop this past year. New data on Thursday showed that there were fewer jobless claims last week than the time before. Reasons for firings and layoffs have been slowing in recent months, which has been a good sign for the labor market. Sales of existing homes rose to their highest level in September 2020, suggesting that buyers still have a keen interest in homes even as supply remains on the low side and prices continue to climb. It should be no surprise that many companies have been able to add to their profits in spite of rising input and labor costs, supply chain issues, etc. What happened to IBM stock Slammed? Shares of IBM fell by 9.5% on Thursday, the third quarter coming up short of investors' expectations. IBM's revenue increased by 0.3% in comparison to last year, reaching $17.6 billion. Wall Street was anticipating an increase of up to $17.8 billion though, so this isn't the best news for the company overall. Despite adjustments for the impending sale of the Kyndryl-maintained infrastructure business, IBM's revenue rose only 2.5%. The company's key cloud and cognitive software business, which includes Red Hat, delivered sales of $5.7 billion. That was slightly below analysts' estimates for revenue of $5.8 billion. CEO Arvind Krishna tried to reassure shareholders by saying, "We are confident that this is a short-term issue which will get resolved soon." With the separation of Kyndryl early next month, IBM takes the next step in our evolution as a platform-centric hybrid cloud and AI company, Krishna said in a press release. We continue to make progress in our software and consulting businesses, which represent our higher growth opportunities. IBM still generates a lot of cash flow. It produced operating and adjusted free cash flow of $16.1 billion and $11.1 billion respectively, both up slightly from the same quarter in the previous year. The tech giant is using its cash balance to pay down debt and return more of its value to shareholders. IBM's dividend currently yields 5.1%, and so while growth-focused investors might not find the company appealing, income seekers will be pleased. Thank you for following.